Morning, retail traders. This is the second day to trade in 2024, and it's going exactly as I planned it to. I did a video 9 days ago on what a double top is and how to trade a double top and what to look for when you see a double top. And there was a couple other characteristics that we had a double top all-time high, and we had a triple top on the yearly, which really put the camel on, it's really sealed, put the nail in the coffin right there, let's say. So I listen to CNBC a lot, and I just get so upset with these people. They're always talking about politics, and they get off the subject, and they're fundamental traders. And I think they're assuming traders, where they just kind of follow the trend and keep riding it up, and they don't bring up charts and talk about supports and resistance levels or where we might go. They just try to pump the market. So I'm being the devil's advocate. Happy birthday to everybody. We got to contain that irrational exuberance. That's one thing that I've learned back during the Greenspan days when we had the .com bubble on the internet. A whole bunch of companies came out and they were going to be the number one, and only ended up being a couple of them that turned out to be grand. And then all these different kind of seasonal things that come up after that, like the legalization of marijuana, the Bitcoin ordeal, the AI ordeal. There's always something that's going to keep this market running and going. And right now, it's two sectors. It's the Bitcoin and it's the AI. AI is already baked in. I mean, they're still running this market up on AI, and the fundamental traders that you see on CNBC will keep bringing up their fundamental ideas, which really, I'm not a fundamental trader. Yes, I do like companies that have cash flow. I think that's about it. I like companies that have good news. That's about it. And if I see bad news on like Apple, CNBC pumping Apple like they did last week, I mean, it was hilarious. And I kept saying, no, they just banned the Apple Watch. I mean, come on. And they kept pumping the Apple. And I said, no, I'm shorting the son of a gun. Because, it just didn't seem right. And I'm playing the devil's advocate with these idiots. So I always got to ask myself, and I'm watching the emotions of these fat cats and what they're calling out. And I'm going, are you serious? Like, I'm not going to mention any names, but Uber was mentioned. And we were at an all-time, we were up there, pretty well stretched out in this last little bit of run that we've had. And they were calling it a buy. And I was saying, no, I'm going to short this stock. It's up too damn much in a short period of time. Things got to consolidate, and they've lost the idea of what consolidation means to the next level. And so I'm sitting here extremely in the greed, watching the extreme greed like I've never seen it before in the 20 years that I've sat behind this desk. And they ask, why are the poll numbers down on Biden? I'm going, well, we're in a world war. Inflation, just because inflation goes down doesn't mean the prices are going to go down. Actually, the government is going to get a 5% pay increase for cost of inflation. And I'm going, well, that ain't going to help matters. Let them suffer a little bit. They get paid very well anyway. Any government employee is going to get a cost of living adjustment. So they say that inflation's going down. It's not. I thought this was kind of funny. I'm sitting here going to the grocery store. I've been paying twice as much for a hamburger that I have been paying for the last 2 years. And I go in there Friday, and they got this stuff marked down to $10, and I'm going, I used to pay $17 for 2 years on this stuff. All of a sudden, they've marked it down. Well, it's an election year. So, my pet grieve is, so we're extremely greedy right now, extreme like I've never seen it before. And the highest level of financial risk is when we're at an all-time 52, a 3-year high on the SPY and the SPX at a double top. So I read chart patterns. I base every trade I take off of a chart pattern. If it's a squeeze on a falling wedge or an ascending triangle or a symmetrical flag or an inverse head and shoulders, a double bottom, triple bottom, whatever it is, that's where I start looking for my trades when I want to get into these stocks. So we're extremely greedy. I want to get, and yesterday they come out to the point of denial. All the fat cats are, oh, what are we doing pulling back for? And it's easy to see when the SPY is at an all-time high, you've got to have some kind of caution. When the SPX is at an all-time high, you've got to have some caution. I mean, you just got to have caution. You just can't trade like that. You got to, first thing comes in my mind is shorting the market or buying a put. That's about the way I think about it in a way. So we have pulled back some. I think we can pull back more. But again, this market is so greedy. And we've got earnings coming out. So my catalyst is we'll consolidate. And then when earnings start to come out with the banks, that might be a good opportunity for a buy. So I just want to emphasize that. And I'm going to put this link that I got of this video that I did of the double top and how to trade it. The SPX and the SPY at an all-time high double top. If you'd have watched this video, you would have probably shorted the market and made a killing. So I've been playing a lot of megaphone patterns. When you have a double top at an all-time high, you're going to have more volatility. You're going to have bigger volatility. And that volatility has turned into megaphone patterns. Last couple of days, 3 days, I've been trading megaphones. Where, you get a big drop and then you get a big bounce on the spread. So I'm going to put this link in the bottom of the video and we can watch that. Or you can take time and learn what a double top is and what to think about when you're approaching a double top. So I trade off the bodies of the candles and we're going to put a price line all the way across that body of that candle right there. Right at 477942. So we go over here to the daily 20-day and we barely breached above that 4779. We hit it once, we tried it again, and then we broke it, and then we pull them back. So this is what you call a Darvas box. This is on the 1 hour time frame. So you want to take a price line and run it all the way across that Darvas box on the bottom of that box. To me, that's going to be your low support test. Why is that? We're going to take another trend line. We're going to run it from the body of this candle right here to the body of this. And that's going to be your support level for now. And see if we retest this triple bottom. Just like a double top, a triple bottom can have the same sounding effect where we start to create a Darvas box to the sideways until earnings come out. Now it can dip on down and hit the 200 on the 1 hour time frame. The sneaky snake trading strategy is all about chart patterns, moving averages, and being in the now. So I use moving averages as ideas to get in and out of a trade or to buy at support, sell at resistance. So the 9 crosses over the 21 here on the 1 hour time frame. And when the 9 starts to curl back up, you might have a possibility of a good little bounce. But I'm going to go ahead and set my alert down here off what I'm seeing as support level. When we broke down, We bounced up and we pulled back, and that's going to be my first support at 4714.11. And if that doesn't hold, I'll go ahead and be looking for this lower support level at 4698 or 99, around 4700. And then if that doesn't hold, I'll be looking at the 200. Now if you pull up the yearly time frame, you'd want to be using the 9 as a support level. And I done some videos in the back. You can go back and watch them on ways to use the 9 and to get into a good trade. Like when the 9 EMA crosses the 21 SMA, it's a possibility of a run up, and that's exactly what we had. So now we broke below that 9, which puts us in a bearish category on the daily time frame. So this here support level, 4700, lands right on the 21. If you go back and watch that video, I said that could be the next support level. Here on, and then also, if you use the weekly, we could pull back and hit the 9 here, and then have a nice little bounce off the 9. Now the last time we called resistance, I called it back. I called it off the 200 back in September, and then we went ahead and called each one of these resistance levels. Had something to do with the head and shoulders. Shoulder line, we had the shoulder line right here. She pulled back. Now she's at a double top. She could pull back to that old shoulder line. And that would be a very strong buy. I mean, I would load the boat. If we hit that number, and we're going to use the wick, if we hit 4605, I'm going to load the boat on this trade and run it back up for a triple top break. Now, if you look at the yearly, we go in here and we look at the yearly. You had a triple top on the yearly candles. Each one of these is a resistance level, and we could not break it on the third time, so every triple top is a consolidated period for a pullback. It's just not going to break out of the gate into a new year, especially after the run we just had. This is, like I said, I've never seen a run like this in the 20 years that I've been trading. So I've been pleading with the room, say this is very irrational, be cautious, don't try to, don't try to overdo it here. We need to consolidate. And that's just experience telling you. So the SPX, that's the SPX. SPY the same way. We had the 3-year high. We touched that 3-year high, and she pulled back. She could pull back to the 9, and that would be a very good spot. Why? Because of this wick. This wick matches up with that 9. So I would be very, very probably, I would probably say that would be the lowest we'll go. That or we'll pull back to this previous high right here, which is not much farther down, about $5. Now these fat cats are extremely bullish, like I've never seen before in my lifetime. And I got to be in the extreme greed category when they're talking. I've never heard them talk like this. They're pumping a market at an all-time high, and the economy sucks. At least it does where I live at. When they get the price of goods down, then I'll consider that we worked on this some. But right now, they're worried about the housing market. Interest rates are so high to buy a house, it's not worth buying a house. They got to bring them down to get them houses bought. A lot of people got locked into them low interest rates, and hallelujah. But for new buyers, you'd be making a big mistake. Wait until the prices come down, because that's what they're trying to do. They're manipulating the market. As far as I care, Pow Pow doesn't know what he's doing. But you'll hear different from the people on CNBC. So we're at an all-time high, and we're going to pull back. I think we're going to hit this 9 on the SPY, or we're going to come back and hit this lower support. And if things get nasty, we come down to this other head and shoulders down here, off this here head and shoulders. But once you break past the shoulder line of a head and shoulders, that now becomes a very strong support level. And same here, we called it off the 200. People were paying attention off these 3 black crows. I was questioned about the 3 black crows even by a rookie. I said, do what you want. This is 3 black crows hitting the 200. We're going to bounce off this sucker. There's just no way around it. Then you let out with 3 white soldiers right here. Boom, baby. So irrational, you see anything on this 3-year time frame that says anything that's irrational is this? Maybe that run up in 2021, but it still had its days of correction. It still had its days of correction. So it was, it was consolidating on the way up. This is no consolidation. None at all. Just because Powell came out and said he wasn't going to raise rates. And I already said that 3 weeks in advance. I said, they ain't going to do it. Next year's an election year. CNBC always talks about politics. They're always talking about the government. Progressive liberals love the money that's being spent. Instead of using their money and building the economy, they're taking, and they beg for the government to do it. And throw all this money in, and it's going to kill us one day. So this thing, pull back to the 9 and then run back up. This is my rant on how they were pumping this market when they shouldn't have been. It's AI. It's going to be a life changer for a lot of people. And a lot of people are going to get hurt because of AI. A lot of jobs are going to be lost. You need to be educated if you're going to be, always got to be rebuilding yourself. So that's it. What I'm looking for on the watch list, on some of my pullbacks. Mara talked about Mara. We'll pull this to the 5-day, 5-minute. So we started the pullback. I talked about where we're going to pull back to. If you go to the 20 or 1 year, you've got a previous high right here. And I think that would be a nice little pullback right there. I put the fibbies on this thing. And at 50% pullback runs right into that top. And I think that'll hold. Tesla and BYDDF. Much better. I chart this about every day. Tesla's going to pull back to the 200 and bounce off the 200, bounce off the 50 SMA right around 232. And then you got the new stock, which is taking BYDDF. Not new, this is the one that Buffett's in. And it's on a rebound. Inventories were very good, and we've got what you call that expansion pattern out of a snake. So you could have some good volatility with this trade. If it doesn't hold the moving averages right here, the 9, it'll drop on down maybe right around the 25.64 area. First support being right here at 26.14. But I do like this trade, and I'll be watching it with Tesla back and forth. It used to be Nile, but nah, I think it's going to be this one right here. We get 3 black crows that come down. That'd be a good opportunity. We get one more day of pullback. I think it would be a good opportunity to jump in this trade and run it back up. That's BYDD. Apps, I got on, well, not apps. Nile, I called a pullback on Nile. And right now we're off to 65. It hit the gap and didn't want to break the gap. Found resistance, pulled back. Maybe definitely a strong buy off the 50, but this is kind of where I've got my support level right now on Nile. So you have to kind of watch it. We have this previous high right here, right around 846. If that holds, that'll bring it back up. Coin, same thing. We hit my first support on coin. Got to clear these up so I can read them. I trade this every day, watch it every day. So we came back and hit the 21, and that was my first support. Now that can hold and consolidate between the 21 and the 9, but I don't see it going back up here until we have another breakout past 45,000. It can always fall back and hit this previous high right here if we do decide to knife and be a very strong buy off this previous resistance. Riot, same way. Right, I got a 50% pullback to this previous high right here, which was head and shoulders. And we did pull back to that shoulder line once before, as you can see right here. Once we broke out of that shoulder line, it came back. So this thing can retest that shoulder one more time and have a double bottom and then move back up. NVIDIA, this is the biggest pump out there right now on CNBC. Again, some idiot came out yesterday and said we were going to double this price. And that would be $1,000. And when they start that shit, I just put on the brakes and I realized that they're being irrational. And 9 out of 10 times I'll short the stock. Because they're not basing this on fundamentals. They're basing it on theory. And I base my predictions on chart patterns. So when I see a double top, I'm going to pull back. You know what I mean? I'm going to pull it back. I almost had a triple top up here. Every time we see a double top, they want to pump this stock. So you can see where it comes to. This is one thing about moving averages. You got to look for that moving average that it runs off of. And right now this is running off the 50 SMA and the 65 EMA. So if we pull back to that area, which is a previous resistance, and we can draw that price line right here, and that 470. Anybody want to bet against me? I bet we hit 470. I mean, this is drastic sell-off right now, and we could have some nice little 1, 2, 3 on the 30-minute. I talk about a 1, 2, 3 strategy. 1, 2, 3, we could have a nice little bounce up maybe to the 9 and find some resistance here on the 30-minute time frame. Now, if I pull up the 20-day, 1 hour, same thing. Same thing. So this could be a little support level for a nice little bounce back up to resistance, but not all the way up here. Not until earnings come out. Earnings are going to be good on this stock. Okay, earnings are going to be great. But again, irrational exuberance. I've been lectured, a lot of the younger traders have never heard of what this meant. They weren't around when Greenspan called the pullback in the market because of what happened with the dot-com boom. And we've got the same kind of boom going on now with AI. The big factor, what AI is going to do, it's going to cut human costs down. which will bring the profitability up in these companies to an extreme high levels. There's a lot of responsibility when you have employees, and anymore, they're not worth having. They're just not worth having. You might get sued. You look at them the wrong way, you're a racist. Then you got to hire a tranny to make everybody happy. So and that's why this big push in AI is coming. We're going to cut out that human factor. That's just the way it is. Rivian, I was all hyped up about Rivian, and inventory fell shy. So this thing's going to pull back to the low support levels again and have to I mean, this has had a great run. Rivian was pumped very, very much by CNBC. And then the inventory comes out. They're supposed to be fundamental traders. Intel's another one. So Intel comes out with news that they're going to build a new factory in Israel. And here we got Israel being blown off the map. Intel's had a great run. We called this bottom out. We were very proud of that in the room. And it's doubled almost in price, or it has doubled in price. It's up 100% in 1 year. Institutional traders, if they get 20% out of something, they usually sell it. This is up 100%. And they're pumping it up again. And they're still pumping this stock. But this is a lagger. This has been a lagger for 2 years. AMD jumped in the room. MU jumped in the room. TSM jumped in the room. NVIDIA market share took, I mean, then you got the other companies like Apple that took market share from these things. But Intel, it's time, and it's had it. Now it's getting up here to resistance levels. I watched Intel for 20 years. I know exactly how this was number one. Intel was number one. Nothing could beat Intel. Intel was in every computer. This was the number one stock. Now it's last. Same thing with AI. I mean, for now, the bubble and the pump and the way CNBC pumps this thing on illusion. So you don't want to fall in love with that. So Intel, I mean, it's a good stock and it's great news, but when Israel's getting blown up, I'd wait a little bit, maybe catch it off the 200 here on the weekly or even on the daily. How we bounced off the 200, I'd probably take it off the 50 SMA. I was watching a guy trading the other day, and he's got a lot of experience. And I said, "Don't you ever use the 200?" I said, "Won't you?" I said he was doing a video, and I said, "Add that 200 in there, and use it in all them time frames, and see what happens." First remark was no. I'm going, what? Every trader I know uses the 200 SMA as a pivot point in a chart, and here, what's this guy saying? No. So right then, I unsubscribed to him, and I said, I ain't trading with this guy. Not if he doesn't know how to use the 200. Apple's the biggest pump out there right now. CNBC was really, really, really pumping Apple at a double top, all-time high. Apple has a reputation of not being that kind of company. It's definitely got a lot of market share, but it's not the kind of company that runs like it has here in the last year. So you reach a double top, all-time high, double top on a 3-year chart, you want to take this stock and short it. IWM's the only one that really has any hope. to move up higher. We nailed this here breakout. This is the one that's really oversold. Double top on the SPY. We already went through that. AMD. Vegas and I called this sucker down at $9. You still got more room to climb on this, but it's going to follow the trend. If it pulls back to this previous high here on the weekly, and that's got a double confirmation of the 9, that'd be a strong buy. $130.59. I'd take this trade and run it back up. Definitely set an alert right there. I heard the Harvard president got resigned finally. Good news to the market for that. So here's Amazon. Amazon's got room to go. I think it's going to be a good trade once the market kind of calms down. Right now we're on the 9, and that 9 could be a solid support, or it'll bounce off this triple top break. What was resistance now becomes support. So I'm looking at a triple top here. 1, 2, 3. Boom. Thing can pull back, land off that 9, off the 200, and find support at that triple top. Just assuming, well, it's an $8 pullback. I can see it happening. But I can also see it breaking this Darvis box. Look at this Darvis box. We had a whole year Darvis box, almost 2 years. And that's a hard resistance to break. Once it breaks past that, into that Darvis box, then you go up to new highs. And then you can count on it running up here and maybe finding a pivot point inside this box. And the easiest way to find that sometimes is just look for a 50% pullback. And there's your red line. You can see where the pivot point is on that stock where we hit last time. Right on it, right on it, right on it. I mean, perfect. So we break that Darvis box, it'll go up to that line. If not, she'll just pull back and retest this triple top down here and then bounce back up. And maybe do it after earnings start to come out. I think earnings are going to be okay. Microsoft's another one. Now you got Bill Gates being accused of sexual harassment, messing around with minors. But they don't take that into consideration. Baba. China's in hell of a shape. The housing market over there, they've built too much. They got so many vacant buildings, and they got so many people that are paying mortgages with buildings not even going up yet. So China's in a really big crunch right now. So Baba, IPO price was 90 some dollars with just 10 billion. Now it's worth a lot more money, 10 times as much, and the price is at 74. So it is a buying opportunity if you want to go long and sit on this thing for years. You could triple your money in 3 years probably. ARK, my little girl here. We've been in a Darvis box for over 1.5 years. We just started to break out of that Darvis box. If we do break out of the Darvis box, I'd swing this trade to $72 and try to hit that 200 on the weekly time frame. Baidu's another one that's been sold real hard. Part of China. We're getting ready to squeeze. I think this trade will be tradable here in another week or two. K-Web, China trade, also beautiful run up to $104. We're getting ready to squeeze. We got a snake break out, pull back into a symmetrical flag or a wedge. So I've got China, I've got oil in here. I always look at the volume highs, and when the market opens, I'll turn it to percentage losers and see if anything on my watch list is worth trading. might get us a knife, or we might get a breakout, and then I can look at the breakout. They call it a gap up trade. When you trade a gap up, you wait for the pullback, find support, and then bounce it on up. So that's it. Let's have a great day trading. Retail traders.